Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today, as every weekend, I want to give you my weekly update for week 48 of 2021. And as always, I want to go through the transactions of the week, the received dividends, and also the news of the week and talk a little bit about the market overall. But before we start, don't forget to subscribe if you're new to my channel, ring the notification bell to never miss another video, and then we will see the next time with another video. And on this channel, if you're new, you can expect 1 or 2 videos every week, and especially every weekend my weekly update on my real money North American portfolio. So the news of last week is of course the continuing of the China crash. Chinese stocks just fall over the last few months, and last week with the delisting of the Didi stocks, it just continuing and gets faster and faster. And of course, the fear and panic is just from the fear of delisting. Didi stock just got delisted on Friday, US stock market, and with that there is a fear and panic that also the other Chinese companies could be delisted, and so also my companies in China like Tencent, Alibaba, and Baidu just fall like a stone to the ground. So I'm really deep in the minus with them, but on the other hand, it's only 14% of my portfolio. So 14% of this portfolio are in China, and so the risk is there, but it's not that much. And it's 14% in this portfolio. If you follow me for a while, you know I also have an European portfolio, also some other things. And so overall in my whole portfolio, the China stocks are around 8%, and so it's a little bit, and of course a lot of money for me, but the risk overall I can handle. We will see how this will work out over the long term. I'm still convinced that this can be good investments, but right now there is nothing rational anymore. It's just fear and panic. And so my plan is to just stick with it, because nothing changed on the business side of things. Baidu, Alibaba, Tencent, still great companies, profitable companies, all fine on the business side. But I also will not add, because obviously there are risks. Delisting is one thing, but also, of course, if you have to handle the Communist Party, you never know what these communists will do next. This is the biggest risk of all, and so I will not add at this point, because I don't have to hire my risk overall in my portfolio. The risk I have now is okay for me, and so I can stick with it and still sleep good at night. And to reach my financial goals, I don't have to take much more risk. And then I also maybe will convert my ADR from the US market in Hong Kong shares. My broker allow that. If you own one of these Chinese shares, I would highly recommend you to ask your broker if it's possible to convert your ADR from the US market to the Hong Kong stock market. Because what means delisting? Delisting is only that you can't trade them anymore on the US stock market. Of course, you still have your ADR, or in Hong Kong the shares, and then of course you still can trade them there. It's not like you lose everything even if they get delisted. And so I really think about to convert this ADR to the Hong Kong shares, and then just stick with it for the long term. But that's just my plan. Of course, you have to think about if you think the risk is just too high, then maybe it's also time to just go out of this shit and look for better investments. But this is my plan, and I will stick to that, and then hopefully everything will be fine over the long run. Take a look at the transactions I did last week. And since the whole market is a kind of weak, and with that also Facebook, or now Meta, is very weak, I bought at 2 times more shares of Facebook or Meta. On December 1st, I bought 4 more shares for $321.64, And on December the 3rd, I bought 5 more shares for $305.89. And so overall, I own now 36 shares of Facebook with a purchase price in average of $291.85. And so my whole position is up 9.55% or $1,118.10. And I made some videos about Facebook where I analyzed the business. If you watch this, and you can find this as every analysis on my channel, then you will understand why I think Facebook will be a great long-term investment. And right now, it seems quite weak, but I think this is just for the moment, and then over the long term, everything will be fine because the business model is just great, despite by all the scandals we have with Facebook in the past and we will have in the future. I'm quite sure about that, but overall I feel very good with this investment. Then jump to the dividends. And last week I received my dividend from Intel, $52.98. Oh, quite a nice cash flow. I will stick with my Intel position, even if it's a little bit in the minus right now. Also Intel, I think, a great long-term investment and a great dividend payer, as you can see. Then take a look at the performance overall. And first of all, take a look at all the current holdings I have in this portfolio. And then, of course, you see at the end, Alibaba minus 42%, Tencent minus 19%. This is quite a hit. And on the other hand, on the positive end of it, the Bank of Nova Scotia, which just raised also the dividend, is up 78%, followed by JP Morgan, Legend & Platt, Coca-Cola, and so on. And if you're new to my channel, you find deeper analyses to all of these companies in my portfolio on my channel. Check this out, and if you find any value in this video or in the analysis, please subscribe to my channel and follow me on my road as a long-term value investor. And of course, as I mentioned before, the market looks a little bit shaky over the last few days. Overall, from the highs, we are just down in the S&P 500 a little bit more than 3%, so almost nothing. But single stocks really lost a lot. And so there can be chances here and there. And therefore, I also think about to add more to my current positions, and therefore I have my table with current price, intrinsic value, and the distance to the intrinsic value. From time to time, add to this current positions, and the green marked positions are the positions which is most likely I will add in the coming days or weeks. And then, of course, I also have a watch list. Activision Blizzard, which is on top of this list, I owned before, and then I sold it for around $86, and now it's down to $57 because of a lot of problems in the management. This was also the reason I sold, because I lost trust in this management. But now it really come to prices where it's way undervalued, and Activision Blizzard will maybe take a look under the $50 mark. Maybe it's time to come back to this overall great company with a lousy management. Second of all, eBay. I made a video last week about eBay and what great company it is. And eBay also can be very interesting if it take a look under $60 for me. And then Checkpoint. I also made a video a few months ago about Checkpoint, a security company. Very, very good business. I really like this company. And if the price just drop a little bit more, it's quite likely that I will open a first position in Checkpoint, because the sector is very interesting, and the company especially looks very, very good to me. So that's the ideas for the coming days and weeks, and we will see if at the end I will buy the one or the other, because overall I have 31% cash in my portfolio still. That's a lot. Normally I don't like to sit on a big pile of cash like that. It's really difficult to find good investments with a big margin of safety, which is very important to me. And so I sit on this cash and just looking for chances. Because, and this is what we should never forget the market overall is on an historic high valuation. Right now, the current Schiller P ratio is 38. This is unbelievable high. Only in the dot-com bubble it was higher, and the median is just 15. And so it seems like we are really in high valuation waters. We just have to be careful and pick carefully, and this is the goal in this overall high valuated market. And so we will see how this will work out, and of course I will inform you every weekend what I do in this portfolio. And just to make this complete, here also a view on my closed trades so far. There are some very good trades with Imperial Oil, Caterpillar, Walt Disney, and so on. And so with that, overall I come to the performance of 50.87% since the start at the 2nd of December 2019, which is still an outperformance to the S&P 500 of a little bit over 5%. But as you can also see on this graphs on the chart, that my portfolio really got a hit over the last few weeks and months, and mainly because of my not so positive Chinese investments right now. And so we will see how this will go on over the long run. To reach my financial goals, in average, I need a performance of around 8 to 10% per year, and therefore everything is fine for me. And as I mentioned before, there's no reason to take very high risk to reach this goal. Just look for good companies, for good profitable companies, and then over the long run, everything will be fine. Nothing crazy, just very maybe sometimes boring investment. So that's it for today with my update on my portfolio. Next week I will take another look on Apple. I analyzed Apple like a year ago or so, and then now I think it's time to take another look and see how the valuation of Apple also changes, and at what point Apple could be a good long-term investment, or at what price it could be interesting to me. So that's it for today. Thanks for watching. I hope you liked it. If so, then please give me a big thumbs up, subscribe to the channel, and then we will see the next time with the analysis of Apple, and next weekend with my weekly update on this portfolio. See you then. Take care. Bye bye.